Friday had an unusually tight range. You can see on the daily chart, this is the Globex chart, all the prominent tails and sideways trading. Here's the day session chart. We've been sideways now for over 3 weeks in a very tight range. We're still well above the moving average. The odds still favor at least a little bit more up, possibly a final bull flag. As far as a lot more up goes, I think the odds are against it because the weekly chart is so unusual. Weekly chart, 38 weeks, not getting close to the moving average. Never happened in the 18 years of the E-mini. We have a pair of dojis last week, a doji inside bar, so it's both a buy signal bar and a sell signal bar. But for a buy signal bar, it might be like this. Bulls buy above it, but then we get this short of a correction. So I think there probably will be more sellers above last week's high than buyers. And I suspect that if we trade below last week's low, there's maybe a 50-50 chance there'll be sellers, 50-50 chance we'll go sideways more. But I think we're coming down here, which would be 100 to maybe 200 points correction before the end of the year. Timing it is difficult. When the channel is tight, it can just keep drifting up and up and up and up. This to me is a spike pullback channel. So this is the target, somewhere 2300, 2340. Obviously, everyone wants the market to have bigger range than it did yesterday, Friday, and also the day before had a small range. In fact, many of the days have spent most of the day in very small ranges. And there's a couple ways to look at it. One is you can look at it the way I used to look at it 30 years ago and be afraid that my career was over, that it was just going to stay that way forever. And then the other way is to understand that the market oscillates between very tight ranges and very big ranges. And more of the high frequency trading firm algorithms and other computer algorithms now are shifting into tight trading range trading. And at some point you reach a tipping point where there are not enough traders willing to do something different. And if everyone is buying low, selling high, and scalping, that will fail. There will not be enough traders willing to do the opposite. And then all of a sudden, instead of getting all these little reversals, you start to get breakouts and swing trades. So I assume that will happen probably this week. We have several or many central banks making policy announcements in September. And the result might be we stay sideways all the way into September when they start to make their announcements. Monthly chart, 9-bar bull microchannel, no pullback for 9 bars. The bulls have been so eager to buy, they don't even wait for the market to dip below the low of last month. They just keep buying at the market. This is extreme. It's unsustainable, climactic, and also is another reason why we should pull back. But how much will the pullback be? 2 or 3 bars, 2 or 3 months, which is probably, about as much as the bears could get in a market that is in such a tight bull channel for so many bars. Here's the daily chart again. Globex chart overnight. Continuation of Friday and a lot of last week. Well, I did not sell the 78 high, but I think a lot of traders might have, betting that we would begin as a continuation of Friday. To me, it's interesting. I know it's boring, but it's also interesting. And that we're going to reach the point where all the algorithms will stop working, trading this style of trading, and they'll have to switch to the market will change. And obviously, if you're in a tight range, an obvious change would be big range. So this is probably going to lead to a breakout up or down. If we do get the upside breakout, I think there's a chance that we could get a very dramatic rally, maybe 30 or 40 points over the course of just a couple of days, like this kind of a thing. And I think the result would be the same, that we would correct sideways to down for a couple of months. This has the potential to lead to a very strong final rally. All right, probably sellers above 78. So here we are. Market's telling us already that it's continuing Friday's trading. The bears who sold the 78 high, he did 5 ticks, it fell 4. You have bulls buying the one low, even though it's a bear bar closing on its low and there's room to the moving average. So it's beginning as a limit order market again. Do I think today will continue that way? It's too early to tell, but this is certainly consistent with what we had on Friday. A lot of the days lately have had decent little moves in the first hour or two, and then they became very quiet. Are we always in long or short? We have the failed breakout above the top of the range. I always like to see at least a couple bars. One huge bar will do it, but it's better, I think, to see a couple bars. Limit order bears 78 high, got their 5 ticks so they could scalp out 4 ticks. Bulls are hoping that this is the start of a bull channel, higher lows, and then eventually everyone concludes that we're going up and we get a bull breakout. Bulls want an opening reversal and an early low of the day. I would not sell below 1, sell in the middle of the tight trading range. What about buying above 2? I think buying above 2 has a higher probability of leading to a swing trade, because the daily chart, that's the weekly chart, but the daily chart is, I think, in a bull flag. We're above the moving average, even though we've gone sideways for several weeks. We're in a bull trend and we're above the moving average. So there's more potential for a big bull trend day than there is for a big bear trend day. If 2 closes on its high and 3 goes above the high of 2, that would have maybe a 25% chance of creating the low of the day. And therefore, bulls will buy above 2 and take the chance. Last week, we had a tight trading range one day, reversed down from above it like we did here, tried to get the opening reversal up, and that failed, and we reversed down a second time. All right, so the close of this bar is important. If it has a 2-tick tail, most bulls will not be willing to buy for a swing. If it has a 1-tick tail, some bulls like this, some bulls will take that for a swing. Anyway, one of the days last week, maybe it's a couple weeks ago. Right now I'm not finding it. Oh, here, tight trading range, reversed down, tried to break above the tight trading range a second time, and reversed down a second time. You sometimes hear me talk about if we break above yesterday's high and reverse twice, it can lead to a swing down. Sometimes if yesterday had a tight trading range, but it was not at the high, and we break twice above the range and reverse down, that's the same as breaking above the high of the day. So if we go up a few ticks, maybe a tick or two above one and reverse down again without getting above yesterday's high, Friday's high, that would be a second failed breakout above the top of this range. Right now, the bears are short below one, stop above one. Not a lot of traders would take that trade, just like not a lot of traders would buy above two, betting on the low of the day. We're still in Friday's range, and the bars today so far are small, and we've already had a reversal down after a gap up. Then we had a reversal up, and now we're reversing down again. So looks a lot like Friday. Traders not eager to swing trade until they see evidence of the tight trading range price action ending. Opening reversal from near the moving average. Not high enough probability for a scalp, but a reasonable swing. Higher probability, wait to see if we get 2 or 3 consecutive bull bars. Everyone wants Friday's tight range to lead to a swing today. Everyone knows that when you get tight range days and a series of them, the market has an increased chance of getting a trend. One thing about the market turning into a trend is you do not have to catch the earliest entry. If it's going to be a bull trend day, there'll be entries all day long. Everyone is so afraid of reversals and risk. A lot of traders want to enter early to reduce their risk. The early entries have smaller risk, stop below 2, but lower probability. Let me check the volume out of curiosity. Well, that's interesting. Only 160 contracts. We broke out, and there's a credible buy signal, yet only 160 contracts. So the actual breakout probably was much less than that. A lot of times when you get a breakout that leads to a significant move, the breakout will occur with 1,000, 2,000, 3,000 contracts. And when you get a breakout with only 160 contracts, now it's up to 600, you have to wonder if it's a trap. It's still too early to conclude. One tick above can be a trap. If you get 2 ticks above, which I think we will get, it increases the chances that the bulls will make money. So I think we're going higher, but I'm open to anything. Always in long, but the bulls need to do more to convince traders of the possible low of the day. The bears want the second reversal from above yesterday's range, and then a swing down. Pretty unusual volume. Bar 3, 12,000 contracts. Bar 2 and bar 1, both under 20,000. So I think the volume is remarkable. It reminds me of 10, 20 years ago, 30 years ago. During the summer, the volume would just dry up. And see now, what's interesting is most of the trading is done by computers, and they don't go on vacation. Yet this is behaving like old-fashioned summer trading, very low volume. 3 consecutive bull bars, opening reversal up from the moving average, always in long, but small bars. Not a lot of traders chasing it up. Bears want a second reversal down from above yesterday's 4-hour, 5-hour trading range. Bulls have a slight probability advantage. 4 bars without a bear body, so that is slightly bullish, still always in long. Selling below 5 is a second failed breakout above yesterday's trading range, but the absence of a bear bar, I think, increases the chances that there'll be buyers below and that we'll try to work higher. If we do start to trend and it looks weak, like a bull leg in a trading range, but starts to form gaps, you have to be thinking about the possibility of a small pullback bull trend day. This is stronger than today, but this kind of a thing where it just kind of looks weak, and I don't have the gaps drawn, but it just starts to form gaps and negative gaps. It just can drift higher and higher and higher like this. This is again stronger than today. You can see my point that, the market keeps reversing, but stays above some support level over to the left. Will we get this? Well, it's too early to tell, but if we start getting pullbacks that don't overlap breakout points, you have to start wondering if the day would end up as a small pullback bull trend. Not a lot of bears will take this short. If we get a bear II on 6, if 6 is an inside bar closing on its low, more bears would be willing to take the short. But we got 3 small sideways bars here, 3 more small sideways bars here. And stop entry traders have not made a penny in the first 6 bars. And the only traders who made money were the limit order bulls who bought below 1 or who bought the 1 close. So a very quiet range. Better to wait. Okay, always in long. Will 6 be another bar without a bear body? Okay, that's interesting. 6 has a bear body, but only a 1-tick bear body, so still always in long. But not doing enough to encourage a lot of traders to buy high. This I've been talking about today, continuing Friday's tight trading range price action, but having the possibility of a trend, a small pullback trend. I say that because Friday was so exceptionally small, and we had other small ranges last week, that puts the market in breakout mode, and that means you're expecting a trend. Today's open does not look like a trend, and whenever you get an open that does not look like a trend, but you have the possibility of a trend day, you have to be thinking about a small pullback bull trend. It begins looking like a bull leg in a trading range, yet it continues to form gaps. Right now we have a gap, 5 low and 3 high. So 1 or 2 more little gaps like that, traders will start buying for any reason, taking a chance that this is the start of a small pullback bull trend. This kind of a thing where the market just keeps working higher, never looking all that strong. Small bars, bad follow through after big bull bars, the absence of consecutive big bull bars, yet it just keeps working higher. Of all the examples I have, this is the most similar to today. A lot of small doji bars. And even though it was a small pullback bull trend for the entire day, the range was not all that big. Now, what about selling above 6? It's a bad looking high buy. Not much momentum from the bulls, and we have a bear bar. I would wait. Right now, I would either be long or flat, and flat's probably the best choice. It's really interesting. So often on the open, most of the time in the open, you get fairly big early moves, and this is now over 20 minutes, and the bulls who bought with a stop above 3 have not made money. So it's really surprising. So always in long, yet stop order bulls were unable to make money after 20 minutes, almost 25 minutes. Now for the bears, it's still a failed breakout of yesterday's range. And now we have a small wedge down on 1, down on 6, and the bears are hoping for a sell signal bar 8. And if they get it, it would be a reasonable sell for a swing down, comparable to the buy the bulls got above 3. After the first bar, we had a new low and a reversal up. Now we're above the high of the first bar. If we get a reversal down, that has a slightly higher probability of being the high of the day. That would create breakout mode where you have, after the first bar, a new low and a reversal up, a new high and a reversal down. All right, so that's the swing sell setup. Still only a 5-tick trap. It's just amazing that 25 minutes after triggering a stop entry buy in the open, traders have not made a penny with their stop entry buy. So warning us that today might be another very quiet day. I still think there's an increased risk of or an increased possibility of a trend day today, either way, up or down. So far, bears have not triggered the short, and that's good for the bulls. If they're able to allow bears to get sell setups, but prevent the bears from triggering them. And the problem is probability. So the bulls have bought above 1, still not a high probability buy. Selling below 9, not a high probability sell. The bars are very small, especially for the first hour, very small bars. So that reduces the chance of a swing. Can you buy the 8 low betting on a 6-bar or 7-bar bull micro channel? I would not. I think best choice is wait. this, if we do trade below 8, it creates a breakout mode pattern. The bars are telling us that even if we get a breakout, today probably will not be a big day. So even if we have a trend day, it's probably not going to be a big trend day. So even if we go up for the next, for the remainder of the day, it probably will not add up to a lot of points, maybe 5 or 6 points. What about the math of selling below 8, stop above 8? You're risking 5 ticks, and maybe you have a 30% chance, 35% chance that it's the high of the day, and maybe 40% chance. However, the reward is probably not going to be 10 points. So even if you sell right here and put a stop above 8 and hold all day, probably the best you'll get is maybe 6 points or so. Bulls, they're buying below 8 for the failed wedge reversal. They want the bull channel to continue. I don't think the market has done enough yet to make traders believe on the direction of the swing, up or down. Both the bulls and bears have reasonable arguments. It's reasonable for the always in bulls to get out here, below 8, below 9, and then wait for a bull bar and buy above a bull bar to get long again. And for the bears, reasonable to get short, stop above 8, higher probability, wait to see if the bars start to get bigger. A second breakout test, 3 high. Still always in long. I think best choice flat. Always in bulls probably have to buy again above 10 if it has a bull body, but I think best choice is flat. Limit order bears who sold 1 point above 3 made money. Stop order bulls above 3 have a 5-tick trap, so that's good for the bears, but still pretty neutral. We're getting near the end of the first hour, and so far a doji bar similar to Friday, first bar of the day Friday, a big doji bar, and that's what followed. Bulls trying to get trend resumption up. I think best choice is to wait. Nobody's making money here, so by waiting, you're not missing great opportunities. Still always in long, and for the bulls, a pullback from the breakout above the top of yesterday's range, and for the bears, a wedge, failed breakout, second failed breakout, 1, 2, above the top of the range. I said it was breakout mode, and theoretically you'll have bulls buying 1 tick above 8, bears selling 1 tick below 2, but the range is so small. When you have a breakout mode set up where the range is small, a lot of times the range has to get bigger. So for example, you go above 8 and then reverse down a second time and create a bigger breakout mode range, or you go below 2 and reverse up and create a bigger range. After the first bar, new low and new high, breakout mode. Theoretically, bears sell on a stop below the low, looking for a trend down. After the first bar, reversed up and reversed down, theoretically traders sell below. After the first bar, we reversed up again, and now we reversed down. So theoretically, traders sell a breakout of the range, right? And if you did, you would have been selling at the bottom of a trading range and you would have lost. This is an example of what I'm talking about today. After the first bar, reverse up and reverse down, but the range too small. And a lot of traders wait for a bigger breakout mode range and then consider taking the breakout mode trade. Here, after the first bar, reverse down, reversed up, and then we reversed down again and reversed up again. So an expanding triangle open. Traders who bought above that or sold below that lost money. Again, after the first bar, new low and new high. Breakout mode, but too small. So most traders would not take that buy. They might take that sell, but even that was not all that good. After the first bar, reversed down from a new high. Then we got a new low, reversed up. This is better for the bulls. We're always in long. This is a bull flag, an attempted bear breakout. That's a higher probability buy. You buy the reversal up. Theoretically, you buy the breakout. But as I said, most traders do not trade breakout mode days with stops, buying the high or selling the low. After the first bar, we went up, we went down. The bears selling the low lost money. Bulls buying the high, hard to make money. Reverse down, reverse up. I tend to look to buy the reversal rather than the breakout. After the first bar, reverse down and reverse up. Strong breakout. You could buy that breakout or wait to buy the close for a swing up. Close the bar 12 at the open of bar 1. Perfect doji bar on today on the open, first hour. So theoretically perfectly neutral on the 60-minute chart. For the bulls, wedge, bull flag, 3 pushes down, 6, 9, and 12. And for the bears, they're hoping that it's a second failed breakout yesterday's trading range. I think we're still always in long. The bears need to do more to take control. We're still above the moving average. We're still above the low of the day. Very difficult to structure profitable trades here. Buying above 1, micro double bottom, opening reversal, lost money. Buying above 3, micro double bottom, opening reversal up, lost money. Selling below 1, selling below 8, 9, both have lost money. Stop entry bears made their money. This is a bear breakout below a wedge bull flag. Are we always in short yet? Well, it depends. If this bar gets big enough, then we are. Otherwise, traders will wait to see what the next bar looks like. Will it be a failed breakout below the wedge bull flag and then reverse up? Or will it be a successful breakout that leads to a swing down? The one problem the bears have, besides the volatility being so low, 60-minute moving average just below. Can you buy the 15 close betting against the breakout, betting on the limit order market? I would not. I think the bears have a second failed breakout above the top of the trading range. They have a credible high of the day. But they need to do more to convince traders that this is the start of the swing down. And, they got a lot of support here. 60-minute moving average, bottom of the trading range. you can see that a lot of bulls are buying the close, and a lot of the bears who sold below 8 or 9 are scalping out 1 point. Breakout mode, bears trying to prevent it from falling below the low of 1, which would theoretically trigger a sell signal. But with the screen looking like this, not a lot of traders are willing to sell with a stop below anything, certainly near the low of the day, right above the 60-minute moving average. And what about buying above 16? The problem with any trade so far today is that the trader's equation is not good. It's hard to structure a profitable trade. Buying above 3 would be okay, but you'd get out below 8 or 9. Selling below 8 or 9, a lot of the bears, it looks like they're scalping here. It looks like they're scalping out with 1 point. For the bulls, double bottom 2 and a failed breakout below the wedge. But I think it's probably better to wait. For the bears, they're still on their swing short, but they might get out above 16. Almost an hour and a half into the day, and we still do not have a 3-point range. So unusual day, very tight. Can the day stay within this range for the remainder of the day? I don't remember the last time I've seen a day with a range under 3 points. So while it's possible, it would be a once every 10-year event, and therefore the odds are very, very high that we're either going below 16 or above 8, or both. Sometimes it's a small range day, you go to a new low, go to a new high. One-minute chart. Only about 400 or 500 contracts on that breakout, on that buy signal. So still no energy. What happens if it breaks above 8? It's breakout mode. You have a double bottom 2 and 16 at the moving average, but with so little energy today, a lot of traders are afraid to buy high or sell low. Bulls had a 5-tick failure above 3, and right now they have a 5-tick failure above 16. A lot of the bulls who did buy above 16 will probably try to scalp for 1 point, and that's part of the reason why we have the potential 5-tick failure. A lot of the bulls are not confident that this is the start of a swing, and they're just trying to get out part or all with 1 point. Do you buy the close or do you sell below? I think best choice, wait. Another 5-tick trap. Can we collapse through the 60-minute moving average? Unlikely. We broke above 17 yesterday, reversed down. Are we still always in long or short? I have to say I think we're probably still always in long, but I am flat at the moment. We had a 2-day breakout here, a pullback, and then we held around the middle of the rally, and we're trying to get a bull breakout above this trading range, if you want, and call it a bull flag, but very weak breakout and very bad follow through. For the bulls, 17 is a breakout of a bull flag, so we got a bull trend, higher lows, higher highs, and then a pullback, and this is the breakout, and this is a pullback from this breakout, so it's a high one buy, but I think best choice, do nothing. I think today we'll have a swing up or down. Sometimes it takes 2 or 3 hours to begin. And when you look back, you say, oh yeah, 7 was the obvious sell signal, or 16 was the obvious buy signal. It's not obvious, but at some point I think we'll get a swing, and it might be underway. It may have already begun, but it's 50-50 chance it'll be up, 50-50 chance it'll be down. Most traders should just be waiting. Very quiet open. I don't know if you remember back here a couple of weeks ago, the market was in about a 5-point range, and then it started to pick up. It's around 9:30 or so, and then we ended up with a huge trend day, over 20 points down, even though the day began with a 5-point range day. Unlikely to happen today, but I'm just making the point that just because the day is very quiet does not mean it has to stay very quiet. The most extreme example that I've seen, or the most extreme example that I remember, is New Year's Eve about 8 years ago. Right here. The market was in a 2-point range for about 4 hours. All the bars prior to that were small, and the bears got trend resumption down at 12:35, and the volume ended up being very big. Bar 78 often very big, but a 2-point range even for 4 hours can still lead to a big breakout. It usually does not, but it can. Odds are we're going to get at least a 5-point range, which means odds are we'll either get 2 points below the low of the day, 2 points above the high of the day, or a little bit of both. Bulls trying to get their breakout. So what do you do at the 8 high? Do you buy on a stop or sell on a stop? Technically it's breakout mode. It's also the neckline of a double bottom, so technically you'd buy on a stop, but I would not. I would wait to see what the breakout looks like. We're in a limit order market here. That was the close of the last hour. Now we have 3 perfect doji bars over the past 3 hours. Not a very good stop entry buy above or a stop entry sell below, but we're forming higher lows and higher highs. I mentioned that the other day. It looks like a bear flag. It certainly does not look like a bull trend, but it is an early bull trend, and at any point it could accelerate up. It's still a bear flag, but breakout mode. And sometimes you get a bear flag that just starts adding bars, and after about 20 bars, it's like a trading range after 20 bars. The probability for a bull breakout becomes as great as the probability of a bear breakout. And we're at that point right now. 6 ticks above 16, so you have some bulls scalping part at one point. I know it feels like the day has gone on a long time, but this is still only a third of the day. We still have a lot of bars left, and the market can still end up as a trend day. Will bears sell 26 close? We know bulls bought 15 close. I think we've stayed always in long all day since we went above 3. And obviously we have a little bit of momentum up, so it's more likely that we'll break above 8 over the next few bars than it is that we'll reverse down. Can you short below 27 for a scalp? No, probability not high enough for a scalp. You could short for a swing, betting that we break below the neckline of the double top. So here's the double top, neckline, measure move down. Right now, we're always in long, which means it's at least slightly more likely that we're going to go at least a little higher. All-time high, about 5 points above where we are. First we got to get above yesterday's high. What do traders do if it closes on its low? Well, a lot of the bulls will get out below 27. And for the bears, I personally would not take the short. I still think it's slightly more likely that we're going higher. That's the breakout to the new high. It's also we had breakout mode because we went below 1, reversed up, and above 1, reversed down. And then we have the breakout of the first 18 bars. But with the range as small as this, I think this breakout is less meaningful, less reliable than in other circumstances. So always in long, break above the neckline of a double bottom, but a trading range day. So would I buy right here on a stop 8 high? I would not. I think if you're buying near the low, not on the breakout. If it changes character and we start to get 2 or 3 big bull bars closing on their highs, then it would be by the close. Maybe we'll get a trending trading range day where you get a breakout lasting a few bars and then another trading range attempt. Can you sell below 29, a failed breakout? I would not. It's always in long and about an 8-bar bull micro channel. If we go sideways and form a double top, a micro double top, then swing traders might sell. And for the bulls to buy again, if 29 is a bad sell signal bar, let's say it is a bull body, bulls will probably buy below its low. Otherwise, they'll wait to see if we go sideways at the moving average, maybe form a triangle or a wedge bull flag at the moving average. 90 to 95% of days have at least one stop entry trade that goes 17 or 18 ticks, 4 points. And 16 is a reasonable stop entry buy. So far, it's only up 8 ticks. What about, what do you do here? The swing bulls, tough call. I think this is not enough to shift it to short. So theoretically, the swing bulls could stay long. I think it's a minor reversal. If it does pull back, it probably will go sideways in a tight range around the moving average, maybe try to form a high 2 or a wedge bull flag. can the bulls get out? Yeah, it's like, if you buy above 3, it's reasonable to get out below 9, or below 8. This is the same thing. If you buy above 16, we have a micro double top, fail breakout. It's reasonable to get out below 29. If you want to trade always in, you wait to see if we get a bull bar in the next few bars, and then you buy above the bull bar again. In general, if you break out of the 18 bar range, which we've done, 90% chance the market will not get back down to the low of the day. I gave that one example. Here, where we broke to a new low today, an 18 bar breakout, but we reversed up and we went above and back above the high. Only 10% of the time do you get that. You get the breakout of the 18 bar range and then a breakout of the opposite end. Limit order bears selling the 8 high. I would rather be long or buying a pullback. Maybe we'll test a 24 high, 25 high, 50% pullback. What about the limit order bears who sold the 18 high? They tried to sell more 1 point higher, unable. I think we'll probably pull back to the gap here, 27 low, in the moving average. And for the bears, while it's a possible high of the day, the channel is so tight, I would not do a stop entry short. Limit order bears selling here are 8 high. They probably would need a stop more than a measured move up, so they have to risk about 3+ points and scale in higher. Limit order bulls buying below 31 or 32, stop below 16. Probably we will not fall below 16. So right now, normally I would say 90% chance we've seen the low of the day. With the range as small as it is, it might be 70% chance. Not enough people willing to buy high. They want to buy lower. Since the range is so small, it probably will double. It can double by going up for a measured move, down for a measured move, or a little bit of both. Go above the high, which it did, and then go below the low. Measured move up does not get us to an all-time high. "60-minute chart, there's the all-time high. Not enough traders want to buy, and not enough traders want to sell. Going sideways, I think traders want to buy a pullback. And whenever that's the case, you get a FOMO type situation, a fear of missing out. So you get bulls buying small just in case it keeps going up and they never get a chance to buy their pullback. And the result can be a tight channel bull trend, just never pulls back very far because bulls keep buying small. If it pulls back, they buy more lower. If it keeps going up, they can make a profit. We're in that window, 9:30 or so, when very quiet days can convert into trend days. They don't have to. Obviously, today's a very small day, but it's, when the market is in a very tight range for the first half of the day, first 3 hours or so, it sometimes breaks into a trend. Usually the trend is not big. I gave you that example a couple of weeks ago where the trend was really big, but more commonly when you break into a trend, it'll be a weak trend, like a trending trading range day, break out 2 or 3 bars and then another range. Bull channel, bear flag. But right now we have a breakout above the 18 bar range. So odds favor the bulls, and odds are that if we do trade down, we'll stay above the low of the day. Maybe, I don't know, at this point, maybe 30% chance we get a new low of the day. Obviously, if we start to sell off bear bar, bear bar, bear bar, then it goes up 40, 50, 60% chance we'll get a new low of the day. But at this minute, 30% chance we'll get a new low of the day. 70% chance whatever pullback we get will form a higher low. Still always in long, but obviously not very bullish. It's probably a little bit of the FOMO type buyers whenever you get a fairly tight channel. In part, it's because traders believe the market's going higher and they're not confident that it'll pull back anytime soon. Rather than missing the trade, they buy small. If it then pulls back, they buy more. I gave this as an example of what today could do. And it's still on track to do this. Double bottom, weak breakout, tight trading range, but just kept working higher all day. Weak breakout, bad follow through, new high of the day, weak breakout, bad follow through, high 1, high 2, high 3, weak breakout, high 1, high 2, high 3, breakout, pullback, slight overlap, high 1, high 1, high 2, high 3, high 4. Again, I don't know that we'll do that, but this is a reasonable template for what the day might be trying to do. I think it's interesting that the measured move target is right here, and that is 18 ticks above the 16 high. So right now it looks like that's where the market is heading. You know, as I said, 90 to 95% of the days you get a swing that is 4 points, 17 or 18 ticks, and it has a good signal bar, and 16 is a good signal bar. So right now it looks like we'll get up to that measured move target before the end of the day. I don't know if my mic is on. This is the day that I think is comparable. This is, I think, more bullish than today, and the range was 10 points. I do not think we'll get a 10-point range, but double bottom, moving average, break above the neckline, measured move up, and just kind of drifted higher all day. So I don't think today we'll get a 10-point range, but we still could get the measured move up. A small pullback bull trend day means the pullbacks are small, both in terms of points and bars. The day began small pullback right here, 1 bar pullback, 1 bar pullback, 1 bar pullback so far. And then in terms of the size of the pullbacks, 1 tick pullback, 1 tick pullback. So if we start to get pullbacks that go down 1 bar, 2 bars, 3 bars, that would change the character of the day. If the pullbacks start to fall, 3, 4, 5 ticks, that would change the character of the day. Right now, I don't see any reason to short. I would either be long or flat. Again, this is a small version of this day. Here, the opening range was 4 points, and today the opening range is less than 3 points. And therefore, if we do continue up, the total range for today will still probably only be about 6 or 7 points. For the bears, I'd need to see a strong reversal down, or a pullback that has 3 or 4 consecutive bear bars, or a pullback that falls 4 or 5 ticks below the low of the prior bar, something to change this from a small pullback bull trend day. Small spike pullback channel, but probably buyers below around the moving average, the 37 low. No sign that the bears will get control today. For the bears to start selling, they need to see a series of bear bars, like a pullback lasting 3 or 4 bars, a bear microchannel. They need to see consecutive big bear bars. They need to see the market fall below a major higher low. And right now, the only major higher low of the day is the 16 low. If they get a couple big consecutive bear bars before falling below 16, it could flip to always in short. But right now, still maybe a 70 or 80% chance we've seen the low of the day. Probably buyers below 45, buyers at the moving average, buyers 37 low, buyers 25 low. It's a 20 gap bar buy. Again, I think we may stay always in long all day. I do think this is a smaller, weaker version of this. Here, a lot more bull bars, and the range was bigger to start with, but the basic idea is the same. Here we have more bear bars, and the entire range is smaller. However, not enough reason yet to sell. 4 bear bars, still always in long, small spike pullback channel, and we have a gap here. The bears still need to do more to convince traders that this is the start of a swing down. They tried to get it, they tried on 1, they tried again on 15, and they're trying again here, they need to do more. Just the number of bars reduces the chances that today will be like here. 1 bar, 2 bar pullback, 1 bar, 1 bar, 1 bar, 2 consecutive bear bars, 3 consecutive bear bars. So today is more bearish than what we had here. Also, the range is smaller, and then the rally here, only 1 or 2 small bear bars, and today the rally had 2, 3, 4, 5, 6, 7, 8, 9, 10. So a lot of bear bars. 5 consecutive bear bars. The bulls will probably need at least a micro double bottom. As far as selling above 54 after 5 bear bars, the problem with doing anything is the range. It's more of a limit order market. Better to be buying the moving average, the 37 low, the 27 low. And if you're selling, I would not have sold up here, but 5 consecutive bear bars, bears will sell the 54 high. I'm not sure that it's worth it. The range is so small. Plus, I think we're still always in long. If you take a stop entry buy, the stop is still down here. 5 consecutive bear bars probably will go sideways for a few more bars. Big enough reversal, so probably a couple legs sideways. So 1 pullback, 2. Still always in long, but we're getting really late in the day. So today's unlikely to get a breakout and a swing. We're probably going to stay in a small day. Right now, the range is 4 points. All right, so I'm highlighting every day where the range at the end of the day was 4 points or less. And today so far is a 4-point day. Okay, the last time we've had a 4-point day was 3 years ago. So what are the odds that today will remain a 4-point day? Small. All right, and given that it's going to become bigger than a 4-point day, is it more likely to become bigger by going above the high of the day or below the low of the day? Well, right now, more likely it'll become bigger going above the high of the day. What happens if we do get a second leg down and the second leg down is down here? Well, then the probability might shift in favor of the bulls. Right now, it's been 3 years, more than 3 years since we've had a day this small. And there have been many days that have started out this small but ended up bigger. The odds are today will end up bigger as well. And right now, it's more likely it'll end up bigger by going above the high of the day. 5 consecutive bear bars, the bears have a chance of a new low, but the odds favor a new high. The odds still favor at least a test down, 5 consecutive bear bars. So it's a small version of big up, big down, big confusion. And the result usually is traders expecting a trading range. Trading range has more than one leg down. So leg up, leg will up, down, up, probably at least a little bit more down. Can you sell here? Betting 5 consecutive bear bars. We'll get some kind of a test down, maybe a double top, higher high, major trend reversal, wedge, 1, 2, 3. It's hard to make money buying or selling, but I still think it's always in long. And therefore, I think it's probably better to be buying pullbacks. But even the traders who bought the moving average right now only have a 2-tick profit. Now, what about selling the 49 high? I think that's an okay thing to do, betting that we will not get up much higher, maybe 3 pushes, 1, 2, 3. But I'd still rather be focusing on buying below bars, below 37, buy the moving average. And what about swing trading? At this point, I'm just looking for little 1-point scalps. Above 37 low, and you have sellers, the bull scalpers who bought the 37 low. And they'll probably buy again if we test down to around the 54 low. And for the bears, lower high major trend reversal, but always in long and measured move target above. The measured move target, I think, becomes less important now that we've traded several ticks below the neckline. Usually then the market looks for some other target, like maybe a measured move up from this double bottom around the same price. Stop entry, I would not sell. You have a 9-bar or 8-bar bull microchannel and then 4 bars without a bear body. I think it's a limit order sell at the high or 1 point higher. We still have room to the measured move target. I still think we'll get there, and therefore it's probably more likely buyers below. I thought we were going to get 2 legs down after 5 bear bars, and we still might go to a higher high minor reversal and then a trading range. I think it's always in the long. I don't think the downside is very great. However, just look at what we've accomplished so far today. The upside is not very great either. We're still only 17 tick range today. You can call it a wedge, you can call it a higher high major trend reversal, but it's also a small pullback bull trend. And I would not be selling with stops yet.
Trying to make you win election.
Trying to get vacuumed up to the target above. We've had a lot of 2-tick tall bars. Will the bulls swing trade? Well, look at it. 72 is the biggest bull trend bar. More than 20 bars into a bull trend. It's more likely a climactic end of the trend than it is a measuring gap. The range today is so small, we might get a measured move up, but I still think the odds are the target right around here would be pretty much the extent of the day. Bulls want consecutive bull bars and a by the close finish, and the bears want the opposite of 15, 16, a breakout and a reversal, breakout and a reversal. You see we got to within a tick of the measured move target from the double bottom. Some of the bulls front ran the target. We're also breaking above yesterday's high. Not much room to the all-time high. We could easily get there today. It's just a couple more points. But we got 2 important targets, yesterday's high and to within a tick of the measured move. When I buy at the market, no, it's more likely 73 will be a bear bar and that the breakout will fail. Will I sell below 73, betting on a swing down and a wedge top? I probably will not, because it's a small pullback bull trend and the odds are the downside will probably not be very big. I've only gone for a few 1-point scalps today, all buys. Remember, yesterday on the daily chart, actually the weekly chart, let me go back to the weekly chart. Last week on the weekly chart, we have an inside bar in a bull trend, so it's a high 1 buy signal. And yesterday, right now, we just went above, I think that's last week's high. By going above Friday's high, we triggered the buy signal. Friday's high was the high in the weekly chart. So therefore, we just triggered a high 1 buy signal on the weekly chart. However, a pair of consecutive dojis, an extreme buy climax, it's a low probability buy, probably sellers above. That does not mean a bear reversal. It just means that probably not a lot of buyers and probably not much higher prices. We still have the magnet of the big round number 2500 above. And the channel on the weekly chart is still very tight. Daily chart is still a bull trend. We keep getting tight trading ranges and higher prices. However, because the weekly chart is so extreme, I think the upside from here is limited, and that we will begin a 100 to 200 point correction at some point over the next month or two. You had limit order bears selling the 49 high or the 63 high. The 63 high bears were not able to scale in. We only went up 4 ticks. The 49 high bears were able to scale in, and they'll probably buy at the 49 high, which is 1 tick below the 73 low. Stop entry bears, I think it's not a very high probability short. The bears made money once today with stop orders over here. And they bar 1, they did not. Bar 36 below a bear bar, below 45 bear bar, 49 bear bar, second entry short, 65 bear bar. So that has not been a profitable strategy today, selling below bear bars. I would get out of longs here. The biggest bull bar late in the bull trend, more likely an exhaustive end of the trend than a measuring gap. But the target is just the 72 low, the bottom of the buy climax low. And that's only a couple ticks below where we are. Always in bulls, do they buy again above 74? I would not. This is probably late enough in the day so that it's better not to take any more buys. The question is, do you sell here? Looking for a test down, maybe to the 54 low. It's hard to convince myself that it's worth it. Are we still always in long? I would be out of longs here. And the question about shorting, I think, I'm not convinced that the math is worth shorting with a stop. Limit order bears 49 and 63. Well, the 49 bears were able to scale in and make money, and the 63 high bears were unable to scale in, so they have to decide whether to simply try to get out around break even here, or they could be holding, hoping that the wedge and the reversal results in a sell-off big enough for a trade. All right, so what about the always in bulls? What do they do? I would not take any more buys. Enough of a reversal, plus you can argue a wedge. I think it'd be hard for the bull trend to resume up. A pullback in a bull channel, but it's a wedge channel, and it's a buy climax 72, and it reversed from yesterday's high and from within a tick of the measured move target, and therefore I think it's not worth taking that buy. was just looking at time and sales, and I just saw an 800 contract trade and a 400 contract trade take place right here at 77.5. You never know if it's initiated by buyers or sellers. The assumption is, since it was initiated at the bid, it was probably buyers, but I don't think that's necessarily true. In any case, we're getting near the end of the day, getting near bar 78, which is typically the biggest volume bar of the day. Okay, we just started it right here. I've been looking at volume in situations, in certain situations, for a long, long time, for a lot of years, and I cannot convince myself that it is useful most of the time. Sometimes it is. You've heard me talk about tick climaxes and volume divergence and tick divergences, but beyond that, I don't think volume is a reliable indicator. That's really amazing. This is bar 78, typically the biggest volume bar of the day, and here we are almost to the end of the bar, and it's only two ticks tall. I don't think I've ever seen a bar 78 that was only 2 ticks tall. There's still time left in the day, and it can get bigger, but this is really, that's amazing. Also, only 29,000, 30,000 contracts, which is fairly small, but that is probably the most unusual bar 78 that I can ever remember. I don't ever remember a 2 tick tall bar 78. So really an incredible day. So far the range is 5.25 points, and that makes it one of the smallest bars of the year. You get about two bars a year this size, and we had a similar small day a week or so ago. This is the daily chart. So far today's range is 5.25 points, and I'll put a pink dot over every day that's 5.25 points. And here's the start of the year, and we had one a few weeks ago, and that was it. And then 2015 we had 0, and 2014 we had 4, or maybe that's in 14, I don't know. But you get a couple of bars a year that are 5.25 points tall. Monthly chart, too early in the month to say anything definitive other than we've had 9 bars without a pullback, which is unusual. That's very unusual on the monthly chart, and therefore unsustainable and climactic. That does not mean reversal. It just means the microchannel will probably stop, this month or next month. That means that we'll trade below the low of the prior month, either this month or next month. Weekly chart, 38 weeks without coming near the moving average, and past 2 weeks, doji bars. We triggered a buy signal this week, just now, a few minutes ago, by going above last week's high. Because last week was a very small week, if you trade above its high, there might be a 50-50 chance, maybe a 40% chance that we reverse down and go below its low. And with that in mind, I'll put a marker down at last week's low. I think last week, this one day was, well, at the time it was both the high and the low of the week. And we went a little bit higher on Friday. I don't know that we'll get down here, but whenever I see the market go above last week's high, let me change that. Whenever I see it go above last week's high, and last week is a small week, I always think it may go also below last week's low. Here's the all-time high right here. We're very close to it. It's fairly common for the market to go right up to a prior major high like that and form a double top. This would be the neckline of the double top. Sometimes it'll go a little bit above it, sometimes a little bit below it in reverse. Whenever the market gets back to any prior high, you always have to be thinking about the possibility of a double top. The bulls look at that and say, oh yeah, we'll get above the prior high and we'll go up for a measured move based upon the height of this range. And the bears say, well, we'll get up to the high and we'll reverse down, maybe a higher high, maybe a lower high, somewhere in that area, break below the neckline and fall for a measured move down. If we do fall for a measured move down, let me turn this into a 60-minute chart. That would be the target. That would be about a 150-point correction. I think if we get down there, we're going down. I'm sorry, that's only a 50 or 60-point correction. If we get down there, we'll probably get here, and if we get here, we'll probably get here. Extremely unusual day today. We opened with a bear reversal. We broke above the top of a 4 or 5 hour trading range, but we're right above the moving average in a small bar, probably buyers somewhere below 1, maybe at the moving average. And then we had a micro double bottom at 2 for a possible low of the day, an opening reversal. It turned out it was the low of the day. 16 was an exact double bottom, but it never went below the low of 3. And then we had 3 consecutive bull bars, always in long. For the bears, they had a wedge, 3 reversals down, 1 and 5, and then 8. Possible high of the day, but fairly tight channel. We fell in maybe an 8-bar bear micro channel down to 16. I said when 15 closed that it was a breakout below a bull flag, but that bulls might buy the close, betting on continued trading range price action and betting against successful breakouts. And bulls did buy the close. Other bulls bought above 16 or above 22, 20, 21. 20, we had an II 21. It's not quite an IOII, but we had a breakout and a pullback. So stop order bulls bought here. It's in a tight trading range, a small range day. The odds are the range is going to get bigger. Maybe it'll double, and it could break above the neckline of the double bottom here and go up for a measured move, or it could break below the double bottom and go down for a measured move, but we got the 60-minute moving average just below, which is support. Another breakout 26, bad follow through 27. That was a warning that although we're in a bull trend, it's probably not going to be a very strong bull trend. I talked early on about the possibility of today being a small pullback bull trend day, and I would call it a small pullback bull trend day. I compared it early on several times to this. Here we rallied about 9 points on the day. I said today was a similar pattern, but everything was smaller, so it was unlikely that we would go up 9 points, although we did go up. The day pretty much looks like this. Here's today. Stop entry buys all day long, all through here. Bulls they wanted to buy a pullback, but they were also aware that it was a small pullback bull trend, and therefore pullbacks may be smaller than they want. And therefore, rather than risk missing the whole trend while waiting for a pullback, they were buying. So it's a FOMO type trade, fear of missing out, a type bull channel. Bulls kept buying, making sure they were long in case we just kept going up, but they were willing to buy more lower, thinking that the first reversal down would lead to a trading range and not a bear trend. And that's the basis of a FOMO type trade. The bulls buy, and if they see a reversal, they buy more, betting against a bear trend, betting on a trading range. They're buying, betting that will either continue up in a bull trend, or if we get a reversal, it'll lead to a trading range, and they'll be able to get out back at their original price. Stop entry shorts. Yes, the bears made money on the short below 8 or 9, but that was their only profitable stop entry short today. That's not true. It looks like it looks like 49 was a 5-tick failure. And for the bulls, stop entry buys were not particularly good either. Buying above 3, 1-point scalp. Actually, it was a 5-tick trap. Buying above 16 or 21 or 23, ultimately profitable. But buying bull flags above 27 or 30 or 33 or 38 or any of these, you had to wait a lot of bars before you made even 1 point. Even buying above 68, 69, it was a 5-tick trap. Had you bought above 67, you made 1 point. And then stop orders through here, not very good. Buy the close, sell the close. I think I would not be trading today like a buy the close, sell the close day. At no point today. Maybe you can argue that it was a small pullback bull trend, 26, 27, 28, so you can just buy closes. But it's not what I would call a typical buy the close type day. If anything, you're buying bear closes like 15 or 18 or 53, 66, 73, 74, betting that the bear reversals will fail. Limit orders, while the bears did make money a couple times today, when it's a small pullback bull trend like this, I really just focus on buying below bars and scalping. Buying below anything. I did not buy. I don't think I bought below 8. I'm pretty sure I did not buy below 8. But buying below even 18, and then over here just buying first pullback and 12, 15 bars here, and then buying the moving average, buying below 37. We have an IOI wedge, but probably buyers below. And then once the bears got that reversal 73, I lost interest in trading. I thought it was bad for the bulls and bad for the bears. The bulls bought 73, did make money. We went up 5 ticks, but they made it without me. Really fascinating how quiet the trading has been. Let me just check one thing. That was July 19th. Okay, and let's see what July 20th looked like. Since that day looks like today, let's check July 19th. Okay, that's the day comparable to today, and this is what the next day looked like. Much bigger swings, right? So, that I think increases the chances that we'll get some swings tomorrow, especially since we've had 2 extremely quiet days today and Friday. Chances are we'll get some movement tomorrow. And then the next day, you can see we dropped even a little bit more. As far as the predictive value for tomorrow and the next day and the next day and the next day, I think you cannot extend out very far. Maybe that day has some predictive value for tomorrow, but for 2, 3, 4 days later, I think this day is so small and so insignificant that it loses a lot of meaning, a lot of influence within a few days. By the end of tomorrow, today the market will forget today. Good question. As a beginning trader trading 15-minute Forex charts, should that person focus on one Forex market more than one? Traders sometimes ask me that, and I remember years ago when I was young, at least 40, 45 years old. It feels like 20 years ago, 25 years ago. I traded with an older guy online for years. And I'd be jumping all over the place, trading Deutschmark and gold and crude oil and E-minis and NASDAQ and stocks and I'll call him Jay. And Jay would just sit there quietly trading the E-mini. And he was making, I would say, 15 points on an average day. And I'm just jumping all over the place. And I used to wonder, Al, all these obvious setups on all these other markets. What's wrong with Jay? He's just trading the E-mini. What's wrong with him? He was in his 70s at the time. I don't know if he's still around. My guess is, now he'd be in his 90s, so I don't know if he's still alive. But in any case, right now in my life, I appreciate what Jay was doing. If you're making 10 or 20 points a day in the E-mini, what do you benefit by also trading a whole bunch of other time frames and a whole bunch of other markets? What is your goal? And I think there's a balance between how much money you make and your happiness. I don't have any problem at all with somebody simply trading the euro versus the dollar. I think it's the most important cross, the biggest volume cross, and usually anything that is happening on some of the market will be somewhat correspond. Of course, it will correspond somewhat to the euro versus the dollar, because whatever's happening on the other market will either have some correlation with the dollar or some correlation with the euro. So the basic patterns will be the same. I understand some of the crosses move more, and some days some other crosses move a lot. And if you're able to, especially if you're trading the 15-minute chart, that gives you time to look at, multiple charts and look for patterns in multiple charts. And, my one rule as for, what to do with trading is, if you do something, are you profitable and are you happy? And if you meet both of those two criteria, then I think there's no reason not to, to do whatever you're doing. Using indicators, same thing. If you got 15 indicators in your chart, so many indicators layered on top that I can't even see the chart. My question is, are you consistently making money and are you happy? And if the answer is yes to both, I would say go ahead and do it, right? And that's the same for trading multiple markets. If you're consistently profitable and happy, then I would continue to do it. If you're not consistently profitable, or if you're too stressed out by trading multiple charts and a lot of indicators, just simplify. Go to one chart, one market, and don't use any indicators, maybe a moving average or two, and that would be it. So tomorrow, probably greater volatility than today. This is really surprising volatility. And you can see the past 2 weeks of small doji bars on the weekly chart. We had 3 over here. We had a series over here. We've had an incredible, I think, number of very quiet days during this rally. But no top yet, and the odds still favor a new all-time high. The all-time high came a couple weeks ago, and it's only a few points above where we are, so we'll probably get a new all-time high. We had a trading range here. We got a couple of new all-time highs and then a reversal. We had a trading range here, new all-time high, trading range here, new high, reversal. And this will probably be the same. But if we do get the reversal, one of these reversals is going to get us, somewhere down here. You don't know which one, but I still think that we're coming down to the May low, maybe the March low before the end of the year. The market might be waiting for those central bank meetings in September. And right now, the market's in search of a catalyst to make it accelerate upward or a catalyst to make it reverse down. And because the weekly chart is so overbought, I think that even if we do get the upside breakout, it'll fail. It'll trap bulls into buying too high, and it'll reverse down here. And I think this whole thing is going to end up as a bull leg in a trading range. We're channeling up. I think we'll channel down, and we'll test this area several months from now. All right, very quiet day. Bull trend day, opening near the low, closing near the high, but very weak. And here we are on the daily chart. Bull trend day. Looks like we're going to a new all-time high, probably tomorrow or the next day. Okay, hope everybody has a good night.